Hello explorers, thanks for joining us again and welcome back to another exciting and informative video on our YouTube channel. If you are joining us for the first time, we want to thank you for watching. In this episode, I will be examining the economy of Ghana. I shall dive into a lot of details in this video, so I will encourage you to bear with me. First, we shall be looking at Ghana's strength, exploring the trade exchanges, and looking at the outlook in the country of Ghana. What are the weaknesses that Ghana currently faces? We're looking at its inflation and also the borrowing, considering the IMF loans. I would explore a number of other import and export situations that Ghana currently faces. More importantly, I would explore the public debt crisis facing Ghana to seeking the IMF assistance. I will also look into inflation and fiscal tightening and why this could weigh on consumption. More importantly, I will look at asset resilience in democracy despite the financial setback. I will encourage you to watch this video to the end for clarity and better understanding. So without any much delay, let's just dive straight into it. For those of you who don't know Ghana in details, let me give you a snapshot with regards to this African country. Ghana sits on the Atlantic Ocean and borders Togo, Cote d'Ivoire, and also Burkina Faso. Its population is just over 29 million people. We are looking at 2018 figures here before you start screaming. In the past 2 decades, it has taken major strides towards democracy under a multi-party system, with its independent judiciary winning public trust. Ghana consistently ranks in the top 3 African countries for freedom of speech and also press. If you look at different aspects, President Akufo-Addo has faced a much more challenging environment during his second term. He is left a couple of months in office and he's not going to be running anytime soon again. Since his terms are limited, he will not be running for office again, like I pointed out. The ruling NPP face a tough challenge towards re-election because of the country's ongoing economic struggles. The success of the President Akufo-Addo's second term will depend on his government's ability towards leading Ghana on the path of debt sustainability and reaching an agreement with external creditors on external debt restructuring under the International Monetary Fund programs. If you look at the recent economic development in Ghana, Ghana's economics enter a full-blown microeconomic crisis in 2022. If you look at figures on the back of pre-existing imbalances and external shocks, large financing needs and tightening financing conditions exacerbated debt sustainability concerns, shutting off Ghana from the international market. Large capital outflows combined with monetary policies tightening in an advanced economy, putting significant pressure on the exchange rate, together with monetary financing of the budget deficit resulting in the inflation. Those developments interrupted the post-COVID-19 recovery of the country of Ghana as the GDP growth declined from 5.1% in 2021 to just 3.1% in 2022. Looking ahead, the 2022 fiscal deficit was well above target at about 11.8%. Public debt rose from 79.6% in 2021 to over 90% of GDP in 2022. Our debt service to revenue reached over 117.6%. To help restore macroeconomic stability, Ghana has secured a 3-year IMF extended credit facility program of about $3 billion and has embarked on a comprehensive debt restructuring. The authorities have committed to a front-loaded fiscal consolidation while pursuing a tighter monetary policy, complemented by structural reforms in the areas of tax policy, revenue, administration, and also public financial management, as well as steps to address weaknesses in the energy and also cocoa sector. The government has completed a domestic debt exchange program known as a DDEP, implemented an external debt repayment standstill, so to point out, and sought official debt restructuring under the common framework. If you look at Ghana, in the first half of 2023, the GDP growth of Ghana rebounded to just 3.2% on the back of strong growth in services, which was 6.3%, and agriculture just over 6.2%. On the other hand, the industrial sector contracted by 2.2%, as well as industry subsectors, looking at oil and gas, manufacturing, also water and sewage collections, and other very important things like construction that shrank except for mining and quarrying. First half of 2023, if you look at Ghana's data, indicated that fiscal balance improved to a deficit of over 0.8% of GDP, while preliminary balance commitment basis recorded a surplus of 1.1% of the gross domestic product of Ghana. Inflation, so the pointer, which has driven by food prices, remain elevated to over 40.1% as of August of 2023. Poverty has worsened. The international poverty rate is estimated at about 27% in 2022, and increased of 2.2 percentage point, which also since 2021. If you look at Ghana's data, Ghanaian households have been under pressure from high inflation and slowing economic growth. If you look at other aspects, if you consider Ghana's situation at the moment, Ghana is a country that has interacted with other global players. Ghana also have some incredible strength if you consider Ghana. If you look at those strengths economically in regards to Ghana, importantly, if you look at mining sector and also oil and gas resources in the country of Ghana, another very important strength for Ghana is a diversified and also the sufficient energy mix with Ghana has. Very important stronghold for Ghana here is the robust mobile telephony development and also progress in digitization. If you look at the stable democracy which is active in civil society, that gives Ghana a strength. More importantly, the attractive business environment that favors the foreign direct investment. However, if you look at the weaknesses that Ghana face, Ghana has high debt level requiring restructuring, high public deficit resulting from low revenues and also poor expenditures control. Ghana also has a fragile banking sector which is non-performing on loans, exposure to public debts and high interest rate. If you look at other areas, dependency on raw materials, gold and oil, just over 70% of the export. If you look at cocoa, just over 10% and 30% with other agricultural products such as cashew nuts and the rest. Another very important weakness there is security threats, including jihadist infiltration in the north of the country. Let's look at the trade exchanges here with regards to Ghana. Considering Ghana's export, which I'm going to focus on, and the import of Ghana, looking at the data that I've put together, export about 23% to the country of China, and also Ghana export just over 19% to the country of Switzerland. And South Africa, Ghana will export about 16% as well, and Ghana's exports to the European Union in general about 10%. The United Arab Emirates is about 5%. However, if you look at the imports that Ghana is involving, we have China. Ghana imports about 17% of goods, percentage points, so to point out, from China, and Europe, Ghana imports about 14% from the European Union, and the United States of America about 12%, and more importantly the UK 7%, and India. However, Ghana's current situation, if you look at the public debt crisis for Ghana, why they are seeking the IMF loan, on top of the efforts to reduce the budget deficit, which were deemed insufficient to ensure debt sustainability, and after economic shocks of the pandemic that I've pointed out, from the war in Ukraine, and also public accounting dealt on a dead blow to the investors' confidence. At the end of 2022, external creditors has held over 60% of public debt stock. Of this share, bondholders hold over 45%, multilateral 30%. As a result, the latter has also domestic creditors, bank, insurance and companies and pension funds have massively withdrawn their funds from the Ghanaian economy, causing the cedi to collapse. Over a year, Ghana's currency lost about 50% of its value against the dollar and drove up external debt. To boil the currency and limit inflation, the central bank raised its rates from 14.5% in January of 2022 to 28% later that year, in parallel with inflation, which exceeded 30% over the year. But the cost of increasing its interest on domestic debt, the central bank foreign exchange reserves melted rapidly from just over 9.7 billion US dollars at the end of 2021 to US dollars 6.6 billion in September September of 2022. A debt exchange program, which also the domestic holders was carried out in the first quarter of 2023, with a haircut to reduce domestic public debts from 35% to just 25% of GDP. Meanwhile, external private creditors came together to form a negotiating committee overall. The Ghanaian government hopes that the restructuring will reduce the total debt stock from about 90% to 60% of GDP. In terms of the fiscal consolidation, the government is likely to improve tax collection to about 11% of GDP in revenue, half of which is swallowed up by interest rate, compared to 18% in expenditures planned for January-September, looking at 2022 figures. Expenditures control, management of public enterprises, and accelerated the structuring of the emergency of cocoa sector. The government has already taken actions by introducing a tax on mobile transaction, the e-levy. In the spring of 2022, the VAT, so the point out, increased to about 2.5% as additional 35% income tax bracket and freezes on salary expenditure and spending. For years now, the imbalance in public financing has blown out external indebtedness and affected the balance of payment. Let's look at inflation and fiscal tightening, how that's going to weigh on the consumption. Given the stalemate in public financing, the tough economic policy expected, which is ongoing this 2023, will squeeze demand. The population already suffered greatly from explosion and explosion in the prices in 2022, leading to a fall in the consumption due to collapse of purchasing power. The country's relative energy independence, crude oil, hydroelectricity, has not prevented energy prices from rising more than 50%, as the government has chosen neither to control prices nor increase subsidies excessively. Demand is likely to remain feverish, and in 2023, given as we are closing the year, uncertainty over the exchange rate and austerity programs associated with the IMF loan. High inflation is likely to lead to an increase in poverty to just 1.9/day thresholds to look at figures, which had also fallen to cover 11.1% of the population in 2019, and a further break on consumption despite reduction in household savings. Given that household consumption is driving force of the economy, minus 70% of Ghana's GDP growth will be affected accordingly. The difficulty faced by banking sector, tight monetary policy, and capital outflows are expected to affect private investment in particular. The development of an industry-based, the one district, one factory plan will therefore not progressively significantly in the near future, after making stacked in agricultural, food and fertilization, car assembly, aluminium, and also steel. Public investment is also likely to be reduced and bear the brunt of the future savings plan. As for the contribution of the net export to growth, the combined easing of the import and also export food and fuel production prices in 2023 should keep in positively. However, illegal mining and smuggling of gold, delays in the commissioning of offshore oil fields, and market power on the cocoa prices by a roster will erode the contribution of foreign trade to growth. The cocoa bond, the Ghana's and one Council de Café Cocoa, the Cote d'Ivoire, so reported, have continued to make joint demand to cost of living and countries of origin premium to foreign buyers since 2019, which have so far failed to produce a firm agreement. As I close this episode, looking at the resilience in democracy despite financial setback, despite suffering a severe loss of political credibility, President Nana Akufo-Addo's government is expected to retain its narrow majority until 2024 general election. Political credibility has been damaged due to the president's emphasis has been on ending dependency on foreign aid. Ongoing demonstration under the slogan "Fix the Country" without any serious incident reported testify to the indignation of the active elements of the civil society against the negligence of a political crisis. Boasting its strong position as a regional economic powerhouse and credited with the institutional strength, Ghana should once again obtain the understanding of its creditors and continue its tradition of dialogue with diverse interlocutors. The countries enjoy close ties with the United States of America and the United Kingdom, as well as with China, which is an an important trajectory and trade partners. Although low, the risk of Islamist terrorist infiltration at the northern border cannot be ignored. Since 2017, Ghana has cooperated with its neighbors to address this problem through the Accra initiatives on anti-jihadist intelligence in the Sahel and Gulf region. If you consider Ghana's situation, as Ghana continues to struggle to come out from the current situation that it finds itself, hopefully that Ghana can pick up itself again and also revamp its situation and come back as a country that was once known. Hopefully Ghana can shade itself and jump into 2024 in a strong way and revamp the system and also come back as one of those countries that were known for their resilience and also making sure that the Ghanaian people can also benefit from the country's resources. We want to thank you for watching. If you are new to our channel, we encourage you to check some of our informative video on this YouTube channel. We are looking forward to meeting you soon in our next episode. Have a good day. Bye bye.